All right, thank you for joining everyone. Thank you for the kind introduction, Tyler. Like he said, my name is Alexander Schultz from Argus, formerly Mercaris, for those of you more familiar with us under that name. For the next 45 minutes or so, what I will be doing is walking through our outlook of the organic market with an emphasis on corn, soybeans, and wheat, both looking at recent trends as well as our outlook for the next few years. Once we get through kind of the generals on those two markets, I'm going to pivot a little bit and spend some time zooming in on the recent trend of organic soybean imports from Africa. So we'll spend some time explaining that in a little bit more detail. And then after that, I, of course, intend to have some time for questions. But with that further ado, let's get moving. Here, this is the slide the lawyers make me put up. All right, you all read all of that already? Good. Let's move on. All right, so to start off, I am going to like to start off with just a little bit of a look at the demand side. And there's no use growing crops if no one wants to buy them. So what are the trends going on there? So on the organic feed side, we are expecting in the 2023 and 2024 marketing year for organic feed to increase, with organic soybean meal use up 3% and feed use up broadly across the board. So we mostly concentrated in the poultry sector rather than dairy. The dairy sector has seen multiple years of retraction. We continue to see that we continue to see the number of milk cows and heifers decline, and we expect that to continue to decline further as the supply moves further in line with demand in the market. On the poultry side, that's where we have the room for some expansion in 2023 and 24. A lot of organic poultry producers slowed production down in 2022 and 23 as a result of the extremely high feed prices that were out there. They were looking at, close to $40 organic soybeans, and many of them simply decided it made more sense to leave product off of the shelves rather than have to pay such a large cost and, only be so sure if you're going to make it on the other side. But now that those prices have come down, something that I'll be discussing in more details, move on to the actual commodities, these markets are finally in a position where they could be looking to expand. From people I've spoken to in the industry, they're expecting that expansion to begin in like Q2, Q3 of this year. So beginning, March, April, so we could start to see some of that pick up. What we would expect is to see a 4% pickup in broilers, 5% in turkeys, and 5% in layers, so 5% across the poultry board, which will then make up for some of that loss in milk cows with that 3% headline number. We do expect to see soybean prices soybean meal continue to overtake organic canola and sunflower, just as those soybean meal prices move down from the frankly extreme levels at the recent marketing years. We'll continue to see more producers shift their focus back onto that. So that's the demand side. We're going to have people willing out there to buy soybeans. So now I'll take some time to discuss, what are the soybeans out there and what's that market going to look like? So to start with, just the main headline here, when people ask me what's going on the market, the one thing I always tell them is there are a lot of organic soybeans out there. Frankly, more organic soybeans than we've ever really had before. As we move into the 2023-24 marketing year, we're looking at the second highest organic soybean harvest on record, paired with record carryover stocks in the 2022-23 marketing year. And with those two things together, we're coming into this market with close to 18 million bushels in supply, and that's not even counting the additional imports that are coming across the marketing year. This increase has been driven by the frankly shocking increase in acres over the recent years. We've seen an increase of 94,000 acres in 2021 and 22-23. Those really high soybean prices that we saw during the time encouraged farmers to plant just about as many soybeans as they possibly could. And as a result, we saw this build to a record crop in 2022-23. This was almost a 40%, so like a 40-50% increase in acres, an additional 8.1 million bushels between 2021 and 22-23. We did see some withdrawal of that production in 23-24 as some of those acres rotated back into corn and other crops, but still, like I said, that second highest on record crop, second highest acreage combined with that record carryover stock means that we simply have a lot of soybeans in the market, and that's going to be the fact that's going to sit in the market for a long time until we are able to eat through those stocks and move supply close in line with demand. It's going to continue to put plenty of bearish pressure on the markets. Now, like I said, in 23-24, we did have some retraction in acres, but this was not broadly across the board, and we've seen there's certainly some heterogeneity across regions. So where I'm from and where Leah's from, up in Minnesota, we actually saw an increase, as did Iowa and North Dakota. But as you look at some of these other states, Nebraska, Illinois, we saw rotations in other crops of people pulling acres out of soybeans. I spoke to a number of farmers who had done like soybean on soybean rotations. Obviously, not something that your certifier is going to look at favorably for very long. So a lot of these people, both from those withdrawing prices and from agronomic pressures, simply had to eventually rotate into other crops, and that's why we saw some of this rotation out of soybeans into other crops, such as corn, which I'll touch on in a little bit. Now, in the US organic soybean space, only about a third of our needs are met by domestic production, and the rest are met by imports. So when we're discussing organic soy markets, it's going to be very important to discuss imports. Now, like with production, these were driven significantly over the recent years by the really sharp price increase into 2020 and 21, and then have been brought down as we've seen some of that come off in the marketing year that wrapped up, 22-23, we did see prices come off, and as a result, we did see organic soybean imports come down, but nowhere near the amount that we would have expected. We were expecting something close to maybe a 30% drop off, but it ended up being much tighter. And we're still looking at really significant imports continuing the way in the market. As we look into this market year that we're currently in, we expect that to continue to withdraw further. We're hoping to shed about another third of imports across both beans and meal, and that will help bring this line of demand. Simply with domestic pricing continue to come down, we've reached a point where it makes less and less sense to continue to import beans. There was a long period where it simply made economic sense to import organic soybean meal. I talked to people who would tell me that they knew that down the street there was organic soybean meal, American made, but it was still cheaper to bring things in from Africa. So they continue to do that. But now those prices are really, again, tight enough that the quality advantage of domestic beans as well as the supply security is going to push people back to the domestic crop and push some of those imports. We're about a quarter way through the market in a year at this point, and I can say from the data I've seen so far, this is how it's shaping out. We're looking at both beans and meal down fairly significantly across most of our major trading partners. And hopefully that will help to bring down some of this excess in supply. Now, as we look at where these soybeans are coming from, that's been something that's seen a significant change over the past few marketing years. India used to be the big player up to 2020, 21, but then, as I'm sure many of you know, the US government stepped in and found that India was illegally subsidizing the soybean meal crush. So they stepped in. So a large tariff was put in place, which made it cost prohibitive for most Indian exporters to ship product to the United States. Um, for the Indian crushers that refused to fill out the stack of paperwork that the U.S. government set them, they were looking at like a 200+% tariff. Some exporters did the math. They got a lower rate, close to 10%, but still that pushed out a lot of that Indian product. We've had to see other regions step in. Black Sea was able to step in, though their supply remains inconsistent due to the continued tensions and conflict going in that region. There's a pulling going on that makes it hard to ship organic product out of Russia and Ukraine. And then, of course, we've seen Africa step in. I'm not going to dally on that too much right now. I have a whole set of slides towards the end where I'll touch on that in more detail, but Africa has continued to be a main player, as well as seeing some expansion from Canada, which mentioned that Canadian soybean meal is simply African meal crushed in Canada and then shipped to us. That becomes Canadian meal through the crushing process as far as the US government is concerned. Now, as we start to think about pricing in the organic market, we have seen, like I said, pricing come up quite significantly. There was that period where we were looking at close to $40 beans and $1,500 organic soybean meal. Obviously not sustainable, so we've seen that really come off. And now the question that we're asking here at Argus, and I'm sure many of you are asking, is where's that going to settle off? Currently, organic soybean prices, for example, at getting shipped in the East Coast is like $8.50, and that's about where we expect to settle off. And this is part of kind of a broad shift that we had a long period of stability prior to COVID and the India situation, and we hope to it's a new period of relative stability, but it's going to look different. Prices have shifted, cost of production has increased significantly, so these markets are going to be a little bit higher, but the market still exists in a place where there is plenty of room to make profit off the organic soybean crush. If we look at this table here, if we look kind of this neutral potential situation with the horizon, look at $800 soybean meal, so off a little bit from where it is now. Organic soybean oil prices have come up significantly. They used to be really not much different than the conventional price. We started to see some premium there. That's a benefit. That alone is enough to support about a $22 soybean, which is up from where it was prior to 2021, where it was more like an $18 to $20 bean. But we expect that with these increased production costs, as well as with the general inflation throughout the economy, that something more like a $21 to $23 bean is going to be out there, and it's going to fit in with this new higher market, as well as with the high increase in costs. Now, even if we get dropped down to $750 a meal, you can still support it with only, shedding 17 cents off of a bushel of beans. Certainly money that I'm sure farmers would rather have, but enough to support the market. So with all of that in mind, question at the end, where does this leave your organic soybean market? Headline, the main thing to keep in mind for anyone involved in the organic bean market is that we are going to continue to see these large supplies in the market from strong imports, strong production, and the strong carryover stocks those create to keep plenty of pressure on pricing. Now, we do need these prices to come down. Like I said, it's taken until fairly recently for the prices to be at a point where it's no longer significantly cost advantageous to import beans from Africa and meal from Africa rather than purchasing on the domestic market. So it may even take a period where we can see prices dip closer to or even below the $20 level just to really help push out some of those foreign imports and bring the market into closer balance. We did see, like I said, a smaller than expected drop off in acreage in 2023. Currently finalizing our 2023 numbers, but we do expect that to continue to come off. Like I said, there was just that absolutely massive jump in acres over the past few years, and that's not going to be sustainable. There's certainly some new farms out there, but not enough to sustain that sort of acreage. So we'll see acreage and production turn to more normal levels. Now, if we get lower pricing, that'll help bring out imports, which will help balance the market. And overall, we're kind of at a point where we need really a couple of things to come together. We need to see some acres come out of the market. We need to see imports come down. And then if we see those paired with demand coming up, like we had expected, that could be at the point where we start to see some stability in the market. Right now, the market is, kind of maybe bearish to neutral. But as we look at the potential for increases from the poultry market later this year, that's the point where we can start to see some light bullish pressure, excuse me, in the market that could finally give, sellers a little bit of excitement. I know prices have not been good, but that requires really a lot of things to come together. There's still potentially a lot of volatility depending on how imports work out and production the next year. Now that's soy. Next, I want to discuss another big market, the organic corn market. And the organic corn market, it's the same headline as I said last time. It's a lot of acres, and a lot of acres mean a lot of production. In 23-24, we saw an increase in acres to record levels, about 347,000 acres. So record organic corn planting. This paired with a 5% increase in yield for about an 11% increase in organic corn production in 2023 compared to the prior marketing year. That alone contributed to put 53 million bushels into the market. And when you add 4 million more bushels that we were carrying over from last marketing year, that puts us in a position where we entered the 2023-24 marketing year with record levels of organic corn out there. There's plenty out there, still plenty to be imported, and that's going to continue to weigh on the markets. Now, again, as we look at how some of that acreage is distributed, we saw this increase in 2023, and that's really going to be concentrated on these upper Corn Belt states around where I'm sure a lot of you live, but then also some of the high plains here. We did see some declines out in the Northeast as I shifted to other crops, but essentially in this region, people are having to rotate back into corn as economic pressure and the decline in soybean prices pushed them into it. And the organic corn market is one that's really driven by the domestic market as opposed to soy. So this will be the important thing to keep an eye on. Plenty of people are growing organic corn, but again, it's a market that's facing a significant bearish price pressure. We've seen prices drop down, towards $8. I've seen bids for this upcoming marketing year in the $7 range, as well as even a couple below $7 delivered into the upper Midwest. And then that answers the question that, corn is for most organic producers a very important part of their rotation. So if organic corn prices continue to come off, how's that going to affect profitability? We're looking at a world in which all costs are up. For organic corn, we got labor up 28%, fuel 63%, land's up. We've all seen, I'm sure, the stories of just land selling in Iowa, Minnesota for crazy values, and fertilizer pricing up, more than 50%. Now, with all those together, If we look at, a $25 soybean, which is maybe a little optimistic, and then we look at wheat, which is going to move fairly in line with corn, and then we'll look at a market where we have these significantly higher cost pressures. It's going to reach a point that if we see organic corn come down towards that $7 range, we continue to see more bearish pressure on the market. That would reach a point in which doing your really standard corn, soybean, wheat rotation is just no longer profitable. You plant corn to plant soybeans, but I'm sure some of you don't mind losing money on your corn, but if you're losing, we see a potential situation where you lose $174 on an acre, that puts you at a point where the entire rotation is unprofitable. And then that, of course, opens plenty of questions. You got to plant corn, or there may be limited options when you want to plant instead. So that could be a pressure on the market, and that could be the sort of thing that could lead to exits from the industry. Now, the organic corn market, as opposed to soy, is mostly domestic driven. More than 2/3 of organic corn needs are met by domestic production, but we do continue to see significant imports coming in, so it's important to keep those in mind. Now, with corn prices coming off across the 22-23 marketing year, nowhere near as much as soybeans, but certainly to a significant degree, we had expected to see a significant withdrawal in imports. If you had asked me, about a year ago, I would have said that we expect those to be down close to a third. Well, that was not the situation that materialized. Organic corn imports remained robust throughout the 2022-23 marketing year across both whole and organic corn, and we ended up with just a 9% decline, with organic cracked corn imports actually being up about 1%. Most of this was driven by continued strong imports from Turkey. Now, 23-24, they're talking to me these numbers are based off of our November commodity outlook. We are expecting something similar. We're expecting about a third to come off. Now, again, we're about a third of the way through the market year. We can see trade numbers through December. And at this point, that sort of decline is not materialized. We're actually currently sitting at a point where organic corn imports on both cracked and whole corn are actually sitting above the prior marketing year. We saw several months of incredibly strong imports, again, almost entirely out of Turkey, though some out of Argentina, in the early months of this marketing year, which has meant that we have plenty of corn coming in, which is adding to that already significant long domestic position that we talked about earlier. So we're looking at a point where we have just a lot of corn out there. And again, excuse me, like with soybeans, that's going to be the headline. That's the one line if someone asks me for the summary of the organic corn market is there's a lot out there. So where are we? We've seen prices come out significantly in the past year. We're at a point where they were in the, where you could expect more than $10 per bushel for organic corn delivered into the Corn Belt. That's no longer realistic. As I look at the spot pricing data we have at Argus, we're looking at things closer to $8 with some sub 8. Like I said, as we look at some of the early new crop bid indications that we started to see, those are incredibly weak, all below $8, with some even sitting below 7. Though I'm sure some of that is just traders out there, fishing for someone who's a little desperate to sell. In 23-24, we saw acreage shift smaller than expected. We had expected corn acres to go up significantly as soybean acres came down, but soybean acres didn't come off as much as we would have thought. Corn acres didn't come up as much as a result, so up only 6%, though when combined with that 5% increase in yield, that puts out an 11% increase in domestic production. And then on top of that, you had the import situation. Canada and Argentina came off a little bit, but that Turkish origin was really strong last year. It's looking to be strong this year, and that's continuing to keep just this ballooning supply in the market. We're looking at a position, as you can see on this table over this chart over to the left, that we're expecting there to be something of a consistent beginning stock situation sitting in the organic corn market. And as long as that remains true, it will be very hard for the organic corn market to build up any sort of bullish pressure. What we're looking at now, for the next 9 months, a year and a half, is that we'll continue to see pricing come off and continue to be weak, with the intention of both pushing out imports at lower pricing will be necessary to compete against Turkish imports as well as Canadian imports, as well as those lower pricing will hopefully incentivize some organic producers come this planting season to plant less corn than they otherwise would have. And that's really what's going to take to bring in this market. We're simply in a position where we're at a net lawn acre position in the organic corn market. There are too many acres out there for what the demand is. And as long as that remains the position, we will not see any significant bullish pressure. So the organic corn market, if you have significant stocks on the farm, as I've been told many organic farmers do, if you see a good price, it's not going to get much better in the near future. It's the unfortunate situation we're in. It's just a very bearish market just because there's too much corn for the amount of mouse it needs to feed. Now that's corn. Again, like soybeans, I apologize, a bit of a dismal picture. I generally don't bring a lot of good news these days. But then to kind of, as we wrap up kind of our general market discussion, move on to our discussion of the wheat market. So wheat acreage, to start off with, has, unlike corn and soybeans, which I've seen, going up, going down, chaos, organic wheat acres have grown steadily over the past few marketing years. As we move into this marketing year, that's up another couple of percent. We expect to be up another couple of percent next year. That will remain a fairly stable market. In terms of where the acreage is up, again, we see it up a little bit, across most of the central, but a lot of that strength is out in the west, where we see a lot of that production normally. This acreage is up, but that's not the entire story, because even as acreage has come off, production has continued to struggle. Major producing regions especially across the upper west, have been incredibly dry up through the last market year. We had multiple poor yields as a result of poor drought, and that meant that even as acres were up in 2022, we saw production come down just due to that poor yield. Now we're at a position where that's starting to look a little bit better, where we've seen improved moisture conditions across much of the west, across the major wheat corn regions in that area, and that has, as a result, that meant that 2023 we had actually a pretty good crop, and we expect that trend to continue in 2024 as long as moisture conditions return to trend. We can see in the data here. If we look at November 2022 on the left compared to November 2023, we're looking at acres that are in extreme or exceptional drought. In 2022, you see we had this big pocket of up here in northern Montana and this major growing region, as well as down here in southeast Wyoming that was incredibly dry, had a lot of organic wheat being produced in those regions, and that alone really weighed on production. Now we've seen some good rain in those regions. The farmers I've talked to out there have a much rosier picture to paint. And as a result, we've seen the moisture condition broadly improve across that region. Now that has meant that has been paired with some declines across more of the central High Plains, central Corn Belt in Nebraska and Montana, a little bit into Iowa, where things are looking a little bit drier, but just as a result of things getting generally wetter across the West, we expect that to move conditions. This is just U.S., but if you were thinking up here into Canada, that's also been very dry. The 2023 Canadian harvest was not great, is what I've been told from my contacts up there. Could have been worse, and certainly has been worse, but wasn't anything approaching bumper crop or even a particularly good crop. And they've seen their moisture conditions improve, not quite as much, but still definitely a bit better up there. So the Canadian supply should also be looking better as they see improved moisture conditions. Now, those are the main three markets I focus on, and with those in mind, now I just want to take a second to give just the above board. What does this all mean as we look through the next 9 months of the 2023-24 marketing year? Over the past few years, what we saw was these big run up, especially in soybeans, but also in corn. And then as we moved into 22-23, we've seen that come off. The high prices led to high imports, led to high production, and led to oversupplies. Then these prices come off. And now we're at a point where these markets barring some sort of new black swan event, are looking for what the new floor is going to be. What's the new normal going to be in the organic corn market? And I think it'll take most of this marketing year, if not into 24-25, to start finding that level. We expect corn to remain, if you look at this dotted line here, to remain bearish throughout 23-24. It's just simple fact that there is too much organic corn out there. We're at a net lawn acres position, into a net lawn supply position. So without demand expected to come off a huge amount, that's going to continue to come down. So we expect the values to move close to $8, and we expect to see some trades, especially here in the Corn Belt, dipping below that. The organic soybean market across 23-24 is looking a little bit better in that the market has some room for improvement later this year. It's not going to be entirely bearish. The advantage of the organic soybean market across corn is that because it is an import-driven market, there's almost an easier lever you can mess with. Messing with acreage and domestic production, you can only change it once a year, and once you plant it, you're locked in. And you can play around with the corn imports, but that's only going to be playing around with a third of the market. We're looking at the organic soybean market, where 70+% of our product is being brought in from overseas. That means that we have a more immediate month-by-month tool that we can that the market broadly can use to adjust itself. So if we see prices come down, pushing out imports, that will help to contract the supply position. Now, if we see that paired with a stronger demand position, if we do see those poultry producers come out and start buying product, that's the point where as we move into especially Q3, but also Q2, we could see some bullish pressure in the market moving from, currently closer to $20, $21 up into more in that $22 to $23 range. Now, that's a lot of things that are going to have to come together for all of this to come out. There's certainly potential for a continued bearish market if that demand picture does not materialize. And we base our guess on this from having talked to a lot of the people who make organic poultry and supply organic poultry last year, and they all told me that I'll just wait. Q2, Q3, it's going to happen. I'm going to start buying it. Well, at this point, the whispers of interest from the organic poultry market have yet to actually become uh, purchases. And I talk to people and those organic poultry producers, they're asking for offers maybe, but they're not currently in the market. So we're going to keep an eye here at Argus over the next month or so, especially as we move into February, is does that idea of improved demand start to materialize? Are we seeing organic poultry producers and those people that supply them going out into the market, buying from farmers, buying from elevators? And if that's what happens, that's what would really lead to this sort of reverse here. We could see prices come up now. Obviously, there are plenty of potentials for chaos across 23, 24. I can only predict so much with, we could see something new happen in imports, so that would be quite a bit harder. I'll talk about that in a little bit. We could see a weakened demand picture, as you look at the economist position is that the possibility of a recession is much lower than people would have thought if you asked a year ago. But if we did see consumer demand come off, if we saw consumer spending come down, this would trickle down, and that's another thing that would stop us from seeing this sort of improvement in the market. So the organic soybean market is really at a bit of a turning point right now, where it could remain pretty flat, pretty ugly from the seller side at least. But if that demand comes out and if we see imports come down, then we could see things improving a little bit and seeing those prices move into more advantageous levels. So that covers my kind of standard market overview across the major commodities. Now, what I want to do for the rest of my presentation, not bearing questions, which I'll of course leave time for, so I'd like to kind of zoom in on one of the factors here, which is specifically imports on organic soy from Africa. Like I said, the organic soy market needs imports. It's simply not possible to supply all the US needs with domestic production. So the question of who our partners are and what it means for the market is important. So with Africa being the new one, I'd like to take the next 10, 15 minutes and discuss what this is going to mean for the market. So like I said, you need imports. US production, even if you plant out every acre you could, it's just not going to be enough to supply the needs. So we continue to need to bring both beans and meal, and that's what we continue to see. You can see, certainly when we saw this record production 22, 23, that was a little bit less reliant on imports, but on the average year, you're looking at a significant amount of this coming in from overseas to feed US organic livestock, and that's going to continue. Now, for a long time, the major source of that was India. India has a lot of organic soybean production, and India was in the interesting situation that for them, it made a lot of sense to crush because they wanted the oil. Organic soybean oil is kind of a weak market here domestically, but in India, there's a lot of interest for it, but not as much interest for the meal. So there was a really good deal for kind of everyone where they would grow organic soybeans or sometimes import them, mill them, keep the oil for themselves, and then ship us the meal, which we needed to feed our cows and pigs and poultry and whatnot. And for a long time, they were the player in the organic market. We have this black line here on the chart showing the share of imports. And you can see, in 2020, 2021, we're at points where they're supplying, close to 80% of the market. India was the major player, and as a result, they really controlled the market. With the US being so reliant on imports, we kind of rely on the foreign market to set our prices. You can't price domestic product much over a foreign product because then people will just bring it in rather than getting it from their neighbors down the street. But as I touched on a little bit of detail, there were some hinky things going on. Some U.S. Processors asked the Department of Commerce to step in and take a look. Department of Commerce did the investigation, and like I mentioned earlier, they found that India was illegally subsidizing the soybean crush in violation of uh, free trade standards. So as a result, they went to every organic soybean processor in India and said, you can fill out this big stack of paperwork to figure out what your fair crush margins are, or we will tax you over 200%. And while India was a major supplier for the US was a fairly minor export partner for India. They could ship to other people. So most of those exporters looked at the stack of paperwork from the government and said, I'm not going to do it. And result, we're charged that 200% and just stop shipping. Those producers that did do the math, they have 10%, they have a 10%, I think it's 9.1%. And that's why you continue to see the fact that there is some organic meal and beans continue to come in from India, that there are still those processors that did the math that needed to be done. Now, having the partner that was supplying up to 80% of your monthly needs jump out of the market, it's obviously going to hit prices. As the Indian market fell off, I think there was some domestic concern about supply concerns. No one running an organic soybean mill wants to just run out of organic soybeans. No one feeding organic poultry wants to run out of organic soybean meal to feed to their chickens. So as a result, there was a bit of a run in the market, and that run led to a run in prices. We saw organic soybean prices jump significantly from early to mid 2021 to mid 2022, where we went from about $20 to more than $40. And that was what caused that long supply position we were talking about earlier. Because of this long position, all people got starry eyes and thought that would exist forever, and they planted as many soybeans as they could. And now with all of that coming out of the ground and with all those imports that came in and are in some cases still not sold, still sitting in the inventory of some elevator, that's what got down prices and how we saw it, move sub 25, at the close to $20 in recent months. Now with India leaving, someone had to step in. Black Sea can only do so much. Canada can only do so much. So who was left? It was Africa. Africa was well positioned to come in and fill the U.S. organic soybean meal need. Between January 2021, a little bit before when this all started happening, and August 2023, we saw the number of organic farms in Africa jump by almost 50%. And this also meant that we significantly pushed up exports. If we look at 2023 exports compared to the production reserve in 2021, we can see that they were producing a lot more to be able to export that much. That a lot of these African companies saw a lot of opportunity. And frankly, a lot of people I talked to in Africa were the same guys who ran those Indian companies. They just opened an operation in, Togo instead, and they've been willing to come and supply the U.S. market. Now, while even we're in a situation again where while Africa has become a major supplier for the U.S. market, the U.S. is still a fairly minor consumer of African organic soy. Look at 2021, this production was only, a fraction of the organic acreage available in Africa. So even as they have to, go into rotations that are expected, there's still plenty of room for them to produce more, continue to ship more to the United States in coming years. Even just so far, the step in production and the opening of new crush facilities in there has led to a steady but significant increase in the share of African imports. You can see it all very clear that you can see this Indian stuff coming off, and as it comes off, we see this dark blue of the African imports beginning to grow significantly. Their share went from, being 5%, if not less, to now we're looking at a point where we see months where they're 40, 50, 60 more percent of the import market of American organic soy. They are really the only region that's positioned to fill that sort of demand, more so than even like Argentina and other major trading partners. So they continue to be positioned for expansion to take advantage of the U.S. market. I was talking to a gentleman who had done a tour through Africa, and what he told me was that if you're an Indian organic soybean producer, the U.S. market, that's your best bet for money. So all these people who can ship over, they're going to continue to do it, and they're going to continue to ship more if the U.S. market is willing to take it. Now, the African imports always come to the United States, but a lot of them also come to our neighbors across the border, up in Canada. And the magic of how trade is counted is that if you take an African soybean into Canada and you mill it, now it's Canadian soybean meal as far as U.S. import statistics are concerned. So it's hard to exactly track how much of the soy meal imported in the United States from Canada is African, but we can make some assumptions. Take a look at the table here to show you some of that. As we see this orange block of African soybean imports into Canada increasing, then we also see this teal block of soy meal exports in the United States growing at the same time. Some of that is certainly supplied by some increases in domestic Canadian production, which is up, but a lot of that is coming from that African meal that's being brought in, milled, and then shipped down across the border to us in the United States to, again, feed our much livestock. Now, I have, committed a bit of the faux pas here of discussing Africa as a contiguous, as, one place, but obviously Africa is a continent rather than being just a country. So these exports are really divided across multiple countries with some major players that have emerged. The big player has been Togo. You can see the big purple slice of this pie chart. Input it's fine almost half. Then we also see stuff coming out of Ethiopia, Nigeria, Ghana, and Uganda as major players. And then there are a couple smaller players like Benin that are shipping us some. But there's this kind of broad geographical distribution in the exports to the United States, which has some advantages. We're in a So with all of this coming in, with Africa being our new supplier, the question is, what does this actually mean? And I'll like to discuss a few potential positives and negatives in the market. Uh, One of the positives is that this is going to be in some ways a much more stable source of imports than India was. With India, all the U.S. government had to do was step in and look at one country and say there are some devious things going on here. The government is violating trade laws, and that entire spigot gets shut off. Well, rather than having one country shipping 200,000 plus metric tons, we have a bunch of countries shipping us smaller volumes. So we're in a safer position where it's going to be a little bit of a challenge for people to convince the Department of Commerce to go look at, say, Ethiopia shipping us 40,000 tons and put the time and money and manpower investigating it. So the chance of seeing that sort of large cutoff from government regulation is much less likely. There does remain the potential of some questions regarding their certification. People are always asking me how are these African certifications, are they questionable? I'm not in the position. I'm not going to accuse anyone of being fraudulent. I'm not an investigator for the USDA, but what I can tell you is that if things did look questionable, if say the USDA didn't like how things were looking, they could step in and do as they've done in other countries in the past and basically tell a major certifier that your certifications are no good anymore. You got to recertify. And then all these farms in Africa under the certified would have to be certified. Now, seems drastic, but in terms of impact, it's only maybe a short-term thing. We could see some hink in the short term, but you'll get maybe a 4-month period to recertify, and within 5-6 months, everyone will be recertified with the potential of maybe a couple of players who just decide it's not worth the cost anymore. So that's really going to be the risk, but that's much less of a risk than like a trade dispute like we had. Now, with Africa being our new lowest supplier partner, that does mean that we're just going to expect prices to just be a little bit higher as a result of that. Competing against African meal is easier than competing against Indian meal. And one final aspect here is, one question I get answered commonly when I give this sort of presentation is how much should you be watching conventional markets? Should I be watching conventional corn, soybean, wheat markets? And the answer is generally no. These markets, because you can't really move product between them, they don't really affect each other. The supply of organic soy the supply of conventional soybeans isn't really going to affect the price of organic soybeans. But there is an aspect that's opened up here that I would like to touch on, which is that if you're an African organic soybean exporter, and you want to export it, you have two main options. You can ship it to the US as organic, or you could ship it to Asia as non-GMO. Now in the US, prices are higher, but there's much higher grain inspection standards. So you have a much higher chance of things being rejected at the border. I've certainly heard stories of plenty of African stuff coming in, not meeting standards, and then you have to worry about shipping all the way back to Africa. Asian countries bringing in non-GMO soybeans are generally a lot weaker about that, so you don't have that risk. So with the non-GMO price generally being quoted as a premium off of conventional, if we see the conventional soybean price run up, that's going to run up this non-GMO price as well, and that could lead to some of these organic soy bushels from Africa instead being shipped over east into Asia, which would lead to weaker imports in the United States. Finally, to answer another question people are asking a lot recently, Africa does expose us to some of the conflicts in the area. The Red Sea has become close to impassable for many ships as a result of tensions going on in the region. And if you look at these countries here on the East Coast, Ethiopia, Uganda, also Kenya, who is a smaller player, a lot of their product was being shipped up north through the Red Sea, through the Mediterranean. Well, now that product has to be either shipped east all the way around, or it has to be brought down across South Africa. And that's going to significantly increase the costs of exporting from those regions. So these areas in Eastern Africa, if we continue to see the Red Sea become a place of conflict, we would expect all those beans to be more expensive at the U.S. port as a result. So something to keep an eye out as the political situation continues to evolve in that area. But overall, Africa is going to be the new main suppliers. We're going to have to keep an eye on them, and they're going to continue to drive the U.S. market. And that takes me to the end of my presentation. I'll just take a brief moment for a little bit of self-promotion, which is that my ability to put together this information comes from Argus's connections, and my colleagues' connections with a number of people throughout the organic industry. I talk regularly with everyone from farmers to traders to end users, and they all provide me with, we talk back and forth about what I'm seeing in the market. And at Argus, we're always looking for new people who want to talk organic markets. So if this was interesting to you, if you want to talk to me and my colleagues about what the organic soybean or corn market is, my contact information is on the slide. Shoot me an email, give me a call, and I'd be happy to bring you into our network of contacts. But then with that all taken care of, we can move on to questions for the remainder of my time.
All right, thank you, Alexander. That was very interesting and intense. I am grateful that I don't have to do economics as much as I normally do. I can tell you that. So yeah, some questions here. You mentioned that the organic dairy industry has consolidated. Apologies if we missed that information on your slides, but is consumer consumption of organic dairy products declining? If so, why is your speculation for that?
So the best data we have on consumer demand for organic products comes from our friends at the OTA. They put out a yearly report, and if you look at their 2022 report, which is the most recent, they show organic dairy sales. So this is sales, not units, to be up. I think it was 6%. Now, I used to work in conventional dairy. I can tell you that they would kill for the chance to have a 6% increase in organic food sales. And obviously, a lot of that came from the general sort of inflation we've been seeing in the market. So there is consumer demand out there, but a lot of it's in some of these more premium products, fancy cheeses, fancy yogurts. So while there's the consumer demand out there and the amount of money they're willing to spend increases, the volume of product they're taking hasn't really come up as a result. So that's why we've seen this market that's why we've seen some of this organic cattle market shift. The organic dairy market is still fairly young, still trying to find that best balance.
All right, thank you. Another one here. Do you know if the integrity of organic certification/verification is being retained on cracked corn that's moving around the world? No one cracks corn to maintain its physical integrity to ship around and store. Cracking is a processing step that allows the corn to be classified as to country of origin. Is this correct, or?
Yes, this is correct. It's just correct that if you take and this is how like Turkish organic cracked corn, Turkey supplies all of our organic cracked corn imports works is they'll bring in cracked corn from Russia, Ukraine, Romania, Kazakhstan, and Turkish production, crack it, and then what I call it, they wave the magic wand and it becomes Turkish cracked corn. Now, in terms of integrity, um, so some of those players do have to be certified. I believe if you like the actual cracking facility, you have to be certified. And one of the things that we've been seeing, I see there's a question, I see the next question is on this. We have the new SOE regulations coming into effect, and that means that kind of everyone in that supply chain is going to be certified. So yeah, it is odd that, I couldn't exactly tell you where that Turkish cracked corn comes from, but the first new cracks has to be certified, and within a couple of months, everyone in that supply chain, until it gets to the US shores, has to be certified. So there's a certifier looking out there for that.
All right, thank you. Yeah, and then another one, you spoke on the certification of being the potential impact or the market access. Are OMRI standards uniform worldwide? And what are the processing policies of organic material outside the continental United States?
I'll admit to not being an expert on the certification process. I'm a markets guy. My understanding is, all organic certification is ultimately done through the USDA. So the USDA has the right from US government to do certification, but the USDA doesn't actually certify. They then have a network of contractors, all the nice names I'm sure you all know, who actually does the certification. So all those certifiers, even if you're certifying in Africa, they're following US standards put out by the NOP. So it's all ultimately under the umbrella of the NOP. Now, like I said, I'm not an expert on the process, but I believe that's the rough picture. In terms of policing mechanisms, again, it's mostly going to be through the actual certifier. And the certifier is going to have to come in and look. And if things look hinky, the certifier will have to handle that. And if the certifier looks questionable, then the NOP handles that. That's my understanding.
All right, thank you. And
it looks like you might have missed one question above from Jason Shriver. At least I have one showing up. I have a question showing up from Jason Shriver. Will the publishing of the strengthened organic enforcement rule requiring electronic organic certificates affect the import market or import meal market? A good question. Last year at Argus, we took some time and interviewed and surveyed a number of our contacts, both certifiers and importers, about this question. And this was the main question: is this going to affect volumes? The short answer is no. Across the board from the importers, they all told me that they don't expect this to affect volumes. The new stuff, new parties have to get certified. The new electronic certificates is a pain. There's going to be like a short-term period where, some people didn't certify until when they're supposed to and are rushing. People are still figuring out the new certifications, though. If you're, for example, if you're ready to operate in Europe, you have to do pretty much the same thing in Europe. So a lot of these companies are prepared for that. So a lot of them do not expect to affect volumes outside of maybe potentially actually pushing out some fraudulent volumes. The real kind of conclusion I actually heard is a lot of these importers wish it would have been more stringent. A lot of these guys were really hoping for like a really broad action, and this is kind of narrow in terms of, I'm to make sure I know I'm not sure. SOE is really the big increase here is that more handlers have to be certified, which is good. If you're touching it, you should probably be certified. And then there's like these new trackable certificates that are going to follow the product from, across the entire supply chain. So both good, both could cause some short-term hiccups as people get accustomed to it, but as we move into the medium and long term, should not affect volumes.